And welcome back, everyone, to another episode of Economic Preppers. I'm joined, as always, by Patrick. Dylan's on assignment, but we have a special guest today. We have Lynette Zang of ITM Trading. She's the chief market analyst. She put that in my mind right before the show, and I blew it. Okay.
No, market is different than marketing.
Market analyst. Market analyst. That's not marketing. That's a different department. Marketing. Okay, I'm not going to say it again.
Just let me help out. Hey, Lynette, welcome. She is the chief market analyst with ITM. It's nothing to do with marketing. She understands the market.
Correct.
Welcome,
many of them. Multiple markets.
Yes. Yes, and it's a pleasure to have her on. And just a quick share here. She's again at ITM Trading, and here's our YouTube. We will provide these links in the description later on, but we have so much to talk about. We want to jump right in, and I know Lynette is in high demand because she knows so much, and she's been doing this for a little while. But we have a lot to talk about, so let's jump right into the first question, which is going to be about a subject that it's very near and dear to your heart. It's about gold and silver. So the first question is really about what we have another bank failure yesterday with First Republic. They went under. That makes 5 roughly. That if you conclude Credit Suisse, banks are getting downgraded. There's new loan programs that are out there. There's subsidized mortgages. Can the banking sector ever recover, or is this finally the death spiral for the banks? I know we're starting with an easy question here, but is this like the start of the death spiral, Lynette? What do you think?
Well, I think it is the death spiral on some levels, but we are transitioning into a new system. And at least from the research that I've seen, the banks are still going to be required to be part of that new system. So I don't think the banking system is going away. I think it's morphing. But the old system in general, not just in the banks, but on every level, social, economic, and financial, we are in transition and have been. So none of this is a big surprise.
Yeah. So, and again, as part of what's going on there, we have a lot of banks that seem to be much like what you advise people, not financial advice, of course, but they're stacking gold. They're stacking gold at a record pace. In fact, I think the number is like the highest gold in the central reserves since 1967. I know we have the chart here in a moment, but is this, why would you say that the banks are doing this, Lynette? Is there a proactive reason that they're adding so much gold to the list and their coffers?
Well, 100%. And when you look at that graph, what you actually do see is that they shifted their selling of gold back in 2005 before the crisis started to hit in 2007. And the reason why they're doing it is because gold is the primary currency metal, and it is the true safe haven asset. It does not require a government to say that it's money, like, the fiat money out there, that stuff. That needs the government to say it's money, and they can turn around and say it's no longer money. But gold is used in every single sector of the global economy. Therefore, it has the broadest base of function and the broadest base of buyer. And 100% of the time, there is demand. That's why it's a safe haven asset. That's why they're accumulating it, because they know that when they do those overnight resets, or even as they devalue the currency's purchasing power, at the end of the day, they take this garbage that has no intrinsic value and they reset it to gold, which is all intrinsic value for all those reasons that I just said. So they want to remain in control and in power. Whoever's holding that gold will remain in control and have choices and have freedom for the individuals. Oh, yeah.
Yeah, there's a chart right there of the decline worth. And it almost goes off the scale, but there's other changes that they're making. Patrick, I know you wanted to bring up a particular story here. I'll get it queued up so we can share it with the viewers here. But you want to talk about coinage? You're on mute, buddy.
Yeah, sorry about that, guys. Got a big motorcycle out back. Yeah, I want to talk about coinage because one of the things that came out is they said they were going to try to change the metal makeup of the coins that they're going to be using in circulation. So a nickel is now not going to be comprised of the same metals that it now is. That to me is really interesting because I know that you are an advocate for coins that are minted before certain dates. I want to say it's 1933. And I know that this is kind of those pivotal moments where they're again trying to change the makeup of the actual metals they're using, the pennies and the nickels and the dimes and the quarters. I would love your input on that. I'm too young to know what's really going on, but something seems like it's going on.
Well, it is going on. And, really, their intention is to go to central bank digital currencies, which is completely intangible. But they like things to appear to be the same so that it's easy for the public to make that transition without realizing what's actually happening. So if we take it back way before both your guys' times, but definitely during my time, to the 60s and the 70s, when they started to shift and take the silver out of the coinage. So they did that. Now, nickels are actually made of nickel, although there was some silver in them during World War II because nickel had a bit more value than silver in terms of creating ammo and whatever other war machines. So changing the currency is pretty typical going into it. But obviously, it's not like there's silver or even nickel or copper in any of the coinage right now. It's really just garbage. And I don't even have any samples of that. Usually it's like, well, you want to round up. Okay, if there's someone to donate, I'll just leave the change because it's a pain in the neck. And most people do that because there's really no value in there. But all of this is leading to the shift in the financial system and in the money system. So where when it was based on physical gold and physical silver, it was a fair system because it was labor. You were trading labor for labor. And the money had four functions. It had a medium of exchange, so a tool of barter, a tool of measure, a short-term tool to ensure that you are properly getting paid for your labor, and a long-term store of value to make sure that no matter when you use that money, you are always being fairly paid for the labor that generated that money. Well, you showed the purchasing power chart, right? So by design, inflation was built into the system so that, and what that does is it creates nominal confusion. Inflation creates nominal confusion. So back in 71, the average wage was $9,500 and a family of four could live with one wage earner. Today, it's 57,000, something like that. And you need two wage earners and you're paycheck to paycheck. So that is absolutely by design to confuse you to think, hey, I'd rather make 57,000 than 9,500. But what that currency would buy you then versus what it would buy you today. Also, going back to the 60s and the 70s, this right now, this $100 bill, this is funny money, but so is the real funny money. Okay. This is the largest denomination that we have in circulation. Mm-hmm. But I remember a day when we used to have 500, 1,000, 5,000, and $10,000 bills. And I remember my father was a developer. And one day I was the only one home. And this man came to the house and gave me 12 $1,000 bills for my father. I had never seen that much money in my life. And I had just gotten out of the shower. I didn't even put it down for 1 second to put a bathrobe on. I just sat on the sofa waiting for him to get home because I was so afraid I would lose it. And you know what they didn't do, which is very similar to what they are doing now, they didn't demonetize it like India did, back in 2006, or was it 2016 rather. What they did is when somebody made a deposit into the bank, just never left the bank. So quietly, as they were shifting into the new system, they were changing the denominations And of course, there is discussion of getting rid of the $100 bill because that's such a large bill. I mean, take it to the grocery store and what does it buy you? Take it to the gas pump and what does it buy you? But it would make a whole lot of sense for them to be keeping the coinage so people think everything is the same, but making it out of cheaper and cheaper and cheaper metals. It's an indication of the shift.
Do you think that's going to add more value to the current coinage? I know that you tried to collect coins the last few years. That probably about for the same reason that nickels are worth double what they are. Are they going to become collector's items? The fact that they were pre-2023, is that going to be a new thing?
Well, I mean, they could. Would I collect them? No, because there's no value in them other than, I suppose, to a collector. Like I do have a $10 gold certificate. I do have a $1 silver certificate. Yeah. Can I use it anywhere? No, it's not really money anymore. Is it a collectible? Yeah, arguably, yes, it's a collectible. I don't think I paid very much for them, but there are some people that do.
Yeah, it might go the way that the Zimbabwe dollars.
Yeah, exactly. I have Zimbabwe dollars. I have Venezuelan bolivars. I have, see, look at that. What's it really worth?
I don't know, but it was very fun to own, and it's just like a silver certificate I own. It's just part of history, right? That's all.
Exactly.
Yeah.
But this is history that has value. Gold and silver.
So given all the dynamics which are hard to keep up, even for those of us who are watching this intently day by day almost, what is the average person? First off, where do you see gold and silver going in the short term and then the long term? I guess the short term would be, say, the next 3 to 6 months. And what can the average investor do at this point, or the average person do to protect their wealth? Should they be acquiring gold and silver? Should they be acquiring other metals? I know that you say, what is the phrase? It's like true wealth shields are made out of metal. I believe that's the correct quote.
Yeah. Wealth shields are made out of metal, gold and silver. So, I don't ever really like to talk too much about short term because what you're really referring to is the spot market, which is 100% manipulated. Mm-hmm. They have created so much gold and silver that does not nor ever will exist. And we are already seeing a huge difference between the paper market, which suppresses the price since a rising gold price is an indication of a failing currency, and the physical markets, as you indicated, the ones that I like, which are purely physical, and those premiums have been expanding. They were at, historic lows, and now that's not true. They're not at historic highs yet, and they're still trading well below gold and silver's true fundamental value. So what should the investor do, or what should the public do? They should buy as much physical gold and silver as they can to protect their purchasing power and get themselves out of the system. Personally, I do not buy any new gold. I don't care about it with silver because I'm not concerned about a confiscation. And a lot of people will say, oh, well, they won't confiscate again. And maybe they won't. But history tells a different story. And when you see something that has happened 100% of the time historically, and we are doing the same thing, I'm thinking my best shot is that we're going to get the same results. So I want the kind of gold that has been exempt from confiscation in the past and would not fall easily under the eminent domain laws. Because the eminent domain laws say they can take anything they want. And since it's easy enough to manipulate the price of gold and silver on the spot market, so what? If spot's trading at 2,500, I do think we're going to see a breakout above the old historic highs on the spot market in the next 3 months because we got June in there. Mm-hmm. But that still is not even marginally reflective of the true value, which is what it would be to cover the coverage ratio of all this garbage that they've created out there, which is closer probably to 20 grand by now. And the more debt they create, the more value in terms of those dollars that this stuff has. So keep buying it, keep stacking it, but you also need to have food, water, energy, security, barterability, community, and shelter. This is your wealth preservation. This
Yeah.
is your portfolio diversifier. This is your safe haven.
Yeah.
Everything.
Those points you touched on, we definitely talk about a lot on this show because we are economic preppers. We talk about being prepared in the community, and it's very important. But as I've lost my train of thought, but regarding the gold here, I think that I think it's people are looking for other ways to protect your wealth and to escape that dollar system. One thing that we'll get to CBDCs in a moment because I know that's a hot button for you as well. But speaking on the digital side, and I think I want to let Patrick ask this question because he used to be very intimate as a Bitcoin miner. So, Patrick, what are your thoughts on the digital side?
Yeah, so Lynette, for me, it's been pretty easy to understand how Bitcoin is different than so many other cryptocurrencies. But I'm trying to understand for you, with the rise of some of the cryptocurrencies like Bitcoin, some investors are asking, is gold, relevant in a modern portfolio? And how much do you think there's potential for gold and Bitcoin to work together in the future? So these are kind of questions I'm looking at for you is, where do you see gold and Bitcoin working in the future together, or if they do at all?
Honestly, so many people have talked to me about Bitcoin and cryptocurrencies. And certainly the Bank for International Settlements has made a place for private cryptocurrencies in there. But the biggest challenge that I have with Bitcoin or any cryptocurrency is its functionality. I think it places a very good and powerful function that as long as there is a market for it, you can put its value on a little drive and stick it in your pocket and go anywhere in the world, which you could definitely do with gold as well. You just get more and more and more rare coin and you can take that value anywhere in the world. But I need to see more functionality. I need to see it even used truly as a tool of barter, but its volatility really eliminates that function. So it's only in one area. And I wish I could be absolutely convinced of its scarcity. And I know I'm going to have all of you people that are very comfortable with it and have looked into it more say, oh, but I see forks. So I guess that's not Bitcoin. But I know this is truly rare. And does it have a place in a modern portfolio? Well, you tell me, if you are going into a war, what do you want? You want a pocket knife or do you want a whole arsenal? Gold is an arsenal. Bitcoin, to me, is a pocket knife.
I know, but I really like this Bitcoin.
And so that's silver. Right?
Oh, okay, fair. You're right. Never mind. Okay. That's what I meant, I guess. Yeah, in a time of war, you are right. That's why I tell our group, you gotta have it. Yeah, guys, and that's the truth is, for all of our community, this is what I'm trying to do. We're inviting Lynette here because the reality is we are crypto people, but I'm here advocating for something different too. If you don't have precious metals as part of your portfolio, you are going to miss out. And there is always going to be an inherent risk that we're never wanting to talk about, which is, let us assume you lose internet for several days. You have no ability to transact. Let us say something happens today. How many people in the US are truly ready to accept Bitcoin or Litecoin or other cryptocurrencies for a cow or for anything else? The reality is, today, the money that we're using is the money that people want to use, and people aren't ready to use Bitcoin yet. So if you don't have gold, if you don't have silver as part of your portfolio, this is me saying, I think you're sorely mistaken.
Right. And I would also like to point out, for those that have actually read the 1996 NSA, which is a government agency white paper on how to create a mint, talking about how to create a Bitcoin or a cryptocurrency, I personally don't think it's a coincidence that Bitcoin came out in January of 2009 and they started quantitative easing in March of 2009. because the mentality of those that buy cryptocurrencies and Bitcoin in particular it's the same mentality as those of us that buy gold, physical gold and physical silver. You're trying to get outside of the system and away from this garbage that's getting destroyed. The challenges and something to think about would be, well, how much of the wealth that has gone into Bitcoin would have gone into gold and silver had Bitcoin not been very mysteriously invented?
Yeah, I know that I've been in the whole, so I work with Rob at Stock Pulse, and I've been talking to a lot of these gold and silver CEOs of mining companies who are saying that they're pretty upset. They're like, man, that money should have gone to gold and silver. It was our time for the run, and we got skipped over because of Bitcoin. But what I'm trying to do with the Stock Pulse community is bring us right back and say, guys, when we understand Bitcoin is cyclical and we see this 4-year cycle, what do you do when it's time to hold your value? Bitcoin is going to tank. Where do you go? This is the time where we come back in and we say gold and silver is the solution for us as well. So at the end of the day, if we understand that gold and silver are truly a scarce asset, a supply that we are in desperate need of, and we have a huge demand and very little supply coming in, we know that the scarcity is there. So it's going to go up in value, especially as they continue to deflate the value of the dollar. You're going to see assets win. You're going to see commodities win, like gold, like silver, and probably Bitcoin.
Yeah, I think that, we talk a lot about diversification as well, because you have gold and silver, time honored money for thousands of years, but do you want to put all your eggs in one basket? That's the concern. Do you want to have some cash on hand for emergencies, have some coins, and have some crypto for exposure? Because Bitcoin has been one of the top performing assets, and then for the past 10 years. So now I know that some people they're reticent about different aspects of it, but having a little bit of diversification, in my view, allows you to have a couple fingers in different buckets, all outside of that financial system.
Yeah.
Well, I can't argue with that. Here's where you hear my hesitancy, right? I have been doing this on some level since I was 10 years old, and I am 68 years old right now. So this is where I've lived my life, thanks to my uncle, who was a major antique dealer back east. And he showed me and taught me not just the value of gold. I mean, I'll tell you the story, but I was about 10. He was my favorite uncle. And my parents and I were at his house, and he goes, come here, I want to show you something. And he took us in a back bedroom, and there were 2 tall floor safes. Now, he opened the doors and he goes, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes. So I turned around and I looked, and I'm telling you, you couldn't fit one more $20 gold coin in those safes. I didn't really understand any of that. I was 10, and it stuck with me, but I can't say that I even realized the value of that lesson, because that was 1964, when it was illegal to hold more than 5 ounces of gold, except in the way that he was holding it, which were pre-33 coins, because he'd go into these wealthy homes and everybody was taught to think, well, gold doesn't back the currency anymore, but who needs it? And so he probably bought them at $35, or maybe he paid more, or, whatever, but not much more than that. So, when you stop and think about that impact, plus I've been a banker, I was a stockbroker, I consider myself a technician, I know how to read a chart and a graph, and my personal preference is to have the lion's share of my wealth. So definitely you could diversify, but to have the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least of my wealth in an overvalued asset or instrument that is in a long-term negative trend. So what is the real trend? The real trend is in the purchasing power of the currency. In Zimbabwe, you look at Zimbabwe, if you have 30 gazillion Zimbabwe dollars. You're broke. You can't buy eggs. So what did they do? Last year, they came out with a 1 ounce gold coin. Who can afford that as legal tender? But who can afford that? Just the elites. The general public can't afford that, right? So they came out with it after all purchasing power was destroyed. Now they're talking about issuing a gold-backed digital currency so that the general public that have a few of these stinky things that they can't really buy anything with can convert and get into their system. I'm watching that really closely. And that, by the way, is the norm. When the public has lost all confidence in the currency, in those that are in power, they turn back to gold 100% of the time. I'm sorry, but Bitcoin has not yet been tested. It's going through its test right now. It's not proven. Gold
That's
and
fair.
silver are proven. So,
Yeah.
So having said that, honestly, I have all my eggs in one basket because I am crystal clear. I've been studying currencies and currency life cycles since 1987. And you see those repeatable patterns, and I'm seeing them. All of the patterns around the shift and the death of a currency are happening right now. I'm not waiting for any of them anymore. They're all happening. So I'm getting to safety. So yeah, I'm sorry. I cannot say that I'm diversified because other than food, water, energy security, barterability, wealth preservation, community, and shelter, that's my diversification, but I'm all in gold and silver. I'm all in.
I
Well,
love your conviction, and I don't disagree with it as a winning strategy.
Yeah,
Right.
and I think
I
that
don't think that's going to be true forever, and it hasn't always been true in the past. But where
But
we
we
are
agree
right
on the
now,
beginning. The crypto commandment number 1, that's our crypto commandments right there. The dollar is garbage is the first commandment. It has nothing to do with crypto. The second crypto commandment is choose the freedom mindset. We want to be able to do whatever we want with our assets. If I want to go buy some eggs, you can't tell me I bought too many. And of course, we're never going to sell our gold or our Bitcoin. We keep that. Sure, if we have something we run into, we need to cover an expense, we can borrow against it, but we'll never sell our gold or our Bitcoin. And then, of course, we cover our assets and we keep it safe. These are all things that have nothing to do with the actual underlying value other than the fact that we know the dollar is garbage.
absolutely.
I think
That's
we
what
all can agree on
Lynette
there.
said.
Yeah, so that's why we're going to win. And then people like me might come to you and be like, whoa, hey, Jeff, we need to go to ITM because, our Bitcoin went up and we don't have much gold. So let's fix that imbalance, right? And then maybe one day Bitcoin will drop again and we go, can't miss that one. I know what's going to happen. Bitcoin's back at 20. Let's sell some gold and silver and get ready to ride it back up. Why? So we can buy more gold at the end of the cycle. That's the name of the game, is you buy as many assets as you can and you never sell these assets. And you can always borrow from your house to get something. But the reality is you don't want to buy depreciating assets. You want to buy assets that are going to cash flow or appreciate. Gold has never lost historically.
Right. It is pretty simple. I don't know that I agree with that philosophy 100% because I have a strategy, again, that's based upon, the historic norms and those patterns, those repeatable patterns. Because right now you have a lot of assets that are at nosebleed levels, but that's going to change.
Yes.
And so, and also, when I became a stockbroker back in 1986, nobody ever talked about you outliving the money you put aside for retirement.
Yeah.
Because back then you could get a treasury bond, which was safer. I mean, I don't think it's a safe haven asset. And look what's happening with the CDSs. I mean, it's not. But back then you could get that at 10%. So, if you had $1 million, you were wealthy, you put that in treasuries and there was your $100,000 a year income, which right then at that level, if you were making $100,000 a year, you were living very high on the hog.
Yeah, 10% according to Shadow Stats is still not enough. It's the real inflation is way higher than that. But
Right.
going back to your point about 1933, I want to address that because back then they confiscated the gold and they revalued it too. So they revalued it they paid people. Well, first they thought they were getting a great deal. They're getting $21 for their $14 gold. and all of a sudden, bang, they have all the gold now. Like, that's going to be $35. So do you anticipate that we could be seeing with all the central banks stockpiling gold and having much less dollars in their coffers? Do you see a potential for we could get a global or even a BRICS revaluation? Could another country go back to the gold standard and push their currencies to a different valuation, and that ripples across the globe? Is that a possibility?
That isn't just a possibility. That is what's going to happen. As when public confidence is lost, they're going to have to get it back, and it's not going to be easy. So gold has been the tool that they used even back then. Roosevelt's fireside chat, when there were bank runs that people didn't trust the currency and they were going to barter and all of this. What did he say? He said, and you can trust the new currency because it's backed by good money, meaning gold that they just confiscated, right?
Yeah.
So, and again, going back to Zimbabwe doing that same kind of thing as a great example. So 100%, because this is a con game. It's been a con game.
Yeah.
And so that requires confidence. And with high inflation, with rapid inflation, people lose confidence. That's why central banks are struggling to regain the confidence that they can control inflation, but they can't because they're out of tools. And the two key tools that they're out of is purchasing power, as you showed in that other graph, and interest rates. So they're breaking the system so they can go back in and drop the interest rates. But you watch how they're going to sell those CBDCs to us, because what they have said is that if we can have our finger on the button 24/7 with our policy, making everybody comply, there won't be any inflation. So we're going to have to experience a significant level of inflation so that they can perpetrate that lie. And most people will glom onto that thinking, but then I don't know how many times they're going to do that overnight revaluation. But globally, on average, they typically do it 3 times. So it could be 4, it could be 6, it could be 1 or 2 or whatever. But somehow people will buy their garbage 3 times before they go, no, I don't believe it anymore. You can tell me, but I don't.
Heard that before.
Exactly.
Well,
no, I really heard someone say it 3 times. Who said that, Jeff?
Oh,
that was
Someone
Cliff
said
High.
that.
Cliff
Okay,
High
yeah.
said that. Yeah, but I think that before we get to CBDCs, we're definitely going to get to next. But I wanted to touch on one point, because all 3 of us were at the VRIC conference.
Oh, yeah.
And we heard you say something that we actually believe as well. And I know you talked to Gerald Salente about this, is that
I love
you
Gerald.
think, yeah, he's great. And I think that we're looking like you said that you stuck your neck out and you said that by the end of June, there's going to be some crisis of financial version to drive us and say, problem, reaction, solution. We're going to drive us. Like, don't let a crisis go to waste. Move us to something. So what do you see? How do you, obviously this is just speculation, of course, but how do you see it playing out between now and say July, when the Federal Reserve and Fed now comes online? What is the event that you see on that horizon between now and the end of June?
Well,
Or even further with
banking
unicorns.
crisis would qualify, don't you think? You think that's
not.
over?
No, I do not.
So, and they're coming out, and now we've got First Republic that's going down, as you said, right? So will they justify ramping up the deposit insurance scheme, which, by the way, was created back in 33 to get people to feel comfortable in the banking system? And they only have 128 billion in their DIF fund. That's the fund that they use to bail the depositors out. But yet, hey, what happened? The FDIC went to the Fed, who went to the Treasury, so it wouldn't show up on the balance sheet, borrowed 184 billion so they could keep some for their losses on their balance sheet, and gave the FDIC 148 billion, which is more than they had in their DIF fund, to bail out the depositors at SVB.
Where's your gun?
And that's it, right? So they say no QE. Don't call it QE. We're doing this, but hey, it was QE before. Now it's not QE.
And
So
they seem to have more tools to hide those numbers too, like the overnights and the QE, and now like they're trying to drive unemployment. But I think that there's definitely going to be something that I think that even the debt ceiling could be in the mix between now and the end of June.
100%, because I guess we didn't learn what happened back in 2011 when we played this game of chicken and we lost our AAA credit rating. So, could they, when you're at the end, and they know they're at the end, I mean, these guys know it even better than I do. What do you do? Do you push it so that you try and do a controlled demolition so that they can stay in power on the other side of this? Because the transition is 100%. It's here. There is literally nothing that I'm waiting for. And yeah, I did say that, and I did stick my neck out because we are transitioning now. Look, maybe it's a big fat nothing burger. It's just another huge experiment that historically has never been done before, transitioning from one interest rate benchmark that they created in the 80s and shockingly discovered during the financial crisis that it was being manipulated. Oh my goodness, what a shock. But it was the public knowing that forced them to shift into the SOFR, which the look on my face is because when you read the little fine print, this is supposed to, the LIBOR was a stated rate. So you just had this group of banks that got together every day and said, gee, if I was going to loan you money, this is how much I would charge you. And if I was going to borrow money from you, this is how much I'd be willing to pay. Okay, what a great way to set $600 trillion worth of contracts on, right? To what is supposed to be a market-based rate. But when you read the fine print, they've eliminated these bonds and these bonds and these bonds. So it's selective. But the real problem with this shift is that even with their accounting fixes, they cannot get the SOFR interest rates at exactly the same level of LIBOR. And these contracts are all the valuation of these contracts, which is the problem that First Republic and all the banks, including the Federal Reserve, is having, is that when interest rates go up, the market value of the principal goes down, right? So when this shift occurs, and I can't tell you because I was just trying to ferret this out this weekend and I couldn't get a clear answer on it. I know in January, 80% or more of the CLO, the leverage loan market, which are to riskier borrowers. And then, so those are leverage loans. And then those are turned into products, Wall Street products, and sold to pension plans and all of this in the form of CLOs. So more than 80% of them still had to transition into the new benchmark. And many of them were fighting it because they were taking in less money when they made that transition. So is this going to be a wall? I could not find how much more still had to transition. I can't tell you that. I don't know.
Well, that's almost like trying to figure out how many derivatives are out there. They just don't want you to know certain things. But I think, like as you were pointing out with the LIBOR and so forth, there are so many new products and new agencies that are just popping on the scene as they're trying to reposition this new financial system. Like going back to LIBOR, we have this new loan product, this LLPA, which I know your friend George Gammon talked about, which leads us, could be the first step into CBDCs. And I don't know if you've heard, like the Bank of International Settlements has a new unicoin going back to cryptocurrency again. Now we have the central bank currency with the central bank currency on top of that. I'm not sure if that's needed or not, but it seems to me that there's a race to launch these CBDCs, tested or not, just to get more control and get the control of the system and keep the banks in the fold before that event in August where BRICS meets and launches a new world currency. So what's your take on unpack all that if you can?
Well, look, we've been seeing the reality is the petrodollar is essentially dead, right? Mm-hmm. And that was what kept the US dollar as the world reserve currency. But you know, these things, would they ask Hemingway, well, how'd you go bankrupt? And he said slowly at first and then rapidly. right? So it's the same kind of thing. It was already back in 2002 that the Federal Reserve had to start buying our treasury bonds because there were not enough buyers out there. The most current data on the dollars held in reserves on a global basis is about 47%. That is bad. That is so bad. So what general public, of course, doesn't see all of this, but the IMF went and created back in 69, but then they tested it, a substitution fund. So what we have to deal with in the US is the loss of that status, which also means the loss of our normal or what we've come to expect is the normal standard of living. And yes, they're going to create all of this new stuff because they want to make this transition as seamless and easy as possible. So how easy would it be to create a crisis that would then justify pumping lots of free money into those Fed Now accounts, right? To get people to try and use the CBDCs and get them comfortable with it. And, you know, once you're in that, if you don't have this and you don't have that, then what are your choices? So yeah, to unpack all of that, absolutely, we are transitioning. And looking at the BRICS, you have all of these lines are being drawn. You know, battle lines are being drawn. The proxy war between Ukraine and Russia is really a war between China and the US, but the BRICS are getting a whole lot more traction. But I'm going to say this, 100%, there is not one little even teeny weeny itty bitty doubt in my mind. Understand that we have to burn off all of the debt, which is how money is created. Although I have heard them talk about what would create money in CBDC. So let me come to that in a second. But they have to burn off the debt, because if they back the currency with gold, that creates restrictions around what they can do. So, yeah, we have to go into a hyperinflation, and it's going to be a synchronized global hyperinflation. And I'm not even convinced in my mind that it's really them against us, other than all of those in power working together. And we have to have sides because we have to divide and conquer the public, right? We don't want the public coming together in community and saying no, right? So a lot of this, I think, is about dividing the population, getting them focused over here, misdirecting their attention so that they can do all this funny business that you're talking about behind the scenes and make that transition and get people to just cooperate. Just like we were told, well, if you buy American products, then us, removing the backing of gold, closing that gold window, that's not going to impact you at all. Oh, really? You showed the graph, right? Of course it is. But they only talk about the good, never the bad, because they don't want you to understand what the motivation is.
Yeah, understanding that CBDCs are coming and are a huge distraction for what is actually happening behind the scenes is one of the reasons why we're here. We want to help our community be prepared. So maybe this is a great time to shift focus of saying, listen, I hear you when you say there's no chance, not even a little bit, no doubt in my mind, things are getting bad. Hyperinflation is coming. The economy is going in a way that it's not going to be fun for people. I would really love your perspective as someone who just gets it. Like, I know the way that you prepare with gold must mean that you're equally prudent in preparing in other ways. So help me understand, what are the things that you would want our audience to know are ways that they can prepare for what's really coming? How can we allow our community, let's do one thing to help them prepare based on this information we're giving. What can they do about it? What's your recommendation?
Well, I can tell you what I've done for myself. And see, I knew in 2008 that the system died, and it was just put on life support and papered over, so people didn't realize what had happened. but I was living in a little 2-bedroom condo getting ready to retire. And I was just it was a place I could lock the door and off I go on my travels and my adventures. And when 2008 happened, instead of doing that, what I did was I bought a half an acre in central Phoenix, a house with a half an acre. And I did that because I knew my daughters wouldn't leave and I'm not leaving them. So I needed to be prepared. And what I also know, and we're seeing this evolve, so everybody should be aware of this anyway, but food becomes the single biggest issue for people during these transitions. So what should they do? They should look at their food security. I mean, that's why I have the mantra. That's what I personally have been working on in earnest. I mean, I've been accumulating gold because I knew it was the end of the currency's life cycle. But I didn't think I'd see it in my lifetime. I really didn't. But 2008 made that quite clear that yes, indeed, we were going to see it. So I would say to people to find your holes, and a good place to look is what happened to you in April of 2020. How easy was it to get food or any of the other things that you needed to do? Because I think that was a big test to see how far they could push people and get them into compliance, depending upon how scared they were, right? So the mantra is the mantra because you've got to ensure that you have this to be as independent and self-sufficient as possible. Food, water, energy, security, barterability, wealth preservation, community, and shelter. And even though food is the biggest issue for people, I would arguably say that community is the single most important part of that mantra, because no one person can do it all by themselves. And
That's right.
I may look like I've done it all by myself, but when we were talking earlier, I said I have a phenomenal support team that helps me accomplish all of this. And when I said that, I was thinking about my farm manager and now I have a bug out location. That's what I discovered in March, April of 2020. When I'm out there walking around going, oh, thank God I did all of this because it didn't impact me at all. I had plenty of toilet paper I could share. I had plenty of food I could share. I had water. I had all those things. But there were riots that took place near my house and near my children's house. And I thought, and I slept in my bed with a gun. And I thought, no. This is not the way to live. Because when people are hungry and hopeless, they make choices they would not otherwise make. And so it took a while to find a bug out location. And I'm executing the mantra on that. So there's another channel that we've opened up, and it's called Beyond Gold and Silver. And it talks about all those other mantra pieces and tries to meet you where you are. So if this is all brand new to you, okay. Well, if you don't have the ability to create gardens, maybe you have the ability to buy an extra bag and you don't have much money, maybe you can buy an extra bag of rice and beans, which make a complete protein, and throw a can of tomatoes in there. It's not bad eating. Put out a rain barrel to make sure that you've got water, get a filter, so you need to just kind of step back, and that can seem overwhelming. But the way that I've done it for myself is I step back and I say, okay, where am I the most vulnerable? You got to preserve your purchasing power. You've got to preserve your purchasing power so that if you fall short in any other areas, you have the way to buy it. But, beyond that, you want to look at it and go, okay, where am I the most vulnerable? And then start to plug that hole and then move on to the next piece of the mantra where you feel the most vulnerable and get it done as quickly as you can. We have a strategy here that's based on all of those patterns and takes everything into account and puts your goals first. So I say they have a strategy. Clearly, they're executing it. I suggest every single person also has a strategy that puts their best interest first. And that is, aside from selling gold and silver, I mean, we are a full service physical gold and silver dealer, so we can get you whatever's available. The challenge with the strategy to convert one into the other is based on availability or the lack thereof. I can tell you for an absolute fact, stuff that I used to be able to get, no big deal, like junk silver. I love junk silver. 64, 90% silver, dimes, quarters, half dollars, right? Now I don't work in that area anymore, but it's my understanding, forget getting junk silver. Not going to happen.
No, it's very hard to get, but this is why I like your mantra so much, Lynette, and I really thank you for coming on the show. But the three of your 8 points are really underrated. Security. Well, if you have your wealth preservation, you got to secure it. You got to keep it. You got to make sure that if riots happen or bad things happen, how are you secured? And maybe you even have a decentralized and you have it in multiple locations. Barter building community. If you can't do it all yourself, your community and the barter ability is part of that. That's why junk silver is a nice thing to have, because everybody knows what a dime is, and 14 dimes make an ounce of silver. So I really want to I want to be respectful of your time. I really thank you for appearing on our show. We love you as part of the Economic Prepper community. You're welcome back at any time. It was wonderful speaking with you. And let me share your contact one last time. ITM Trading, the Chief Market Analyst. Market Analyst. I repeat it until I get it right. The Market Analyst. And this is also her YouTube channel. There will be links as well in the description. So Lynette, one last time, thank you so much helping our viewers to be prepared and not scared today. So thank you, everyone. Really appreciate the time. Lynette, final words?
Just to get it done. There is no time to procrastinate. You need to just get it done, move forward, and make sure that, go out and meet your neighbors, go out and meet people, there are community gardens. But, we also just recently, like a couple of weeks ago, opened up our Thrivers community, which it brings people together. And what I'm finding on there, which makes me so happy, is people are going, I'm in North Carolina, I'm here, I'm there, because there are people actually all over the world that are part of this, and they are coming together so that not only can you get information, like yesterday we had a live Zoom and, we were talking about security, and there was a security expert on there. And so I leaned into him and was asking him questions, but we're all there to build this community. That's why I'm here today, right? Because it's critically important to build this community.
100% agree, Lynette. And thank you so much for helping our community. And thank you for all the viewers that are part of our community. And we hope that this video and the rest of our videos, and Lynette as well, helps you to be prepared and not scared. See you next time.